Good afternoon, ladies and gentlemen, and welcome to this session of the UNEP-FI Global Roundtable on Transforming Finance, Accelerating Change. My name is Elliott Harris. I'm the former UN Assistant Secretary General for Economic Development and Chief Economist. And it is my privilege to moderate this session entitled Transforming Finance for Real Economy Change. Much has already changed in the financial world since the adoption of the Sustainable Development Agenda with its Sustainable Development Goals and the Paris Agreement on climate change in 2015. The changes have been both incremental and fundamental, methodical, sometimes revolutionary, but they have been uneven across countries and across segments of financial markets. They are, however, picking up momentum and can no longer be ignored. It has long been recognized that achieving sustainable development requires a structural transformation of our economies and societies, and that itself will not occur unless private finance is increasingly directed towards sustainable private activities and investments. There's a much broader awareness of this imperative among financial actors, and many are already actively engaged in shifting the thrust of their management and investment activities to reflect this. And yet, it is not an easy transition to make. We cannot expect the necessary changes to take place overnight. There will still be real sector activities that are less than sustainable for some time to come. And this has an impact on the speed of transition in the financial sector as well. We have brought together today a panel of 4 expert speakers to help us unpack some of the challenges that finance faces in helping to transform the real economy. Our speakers represent the different parts of the financial system: institutional investors, banks, insurance, as well as a representative of private industry. Dr. Renosi Mokate is the chairperson of the Board of Trustees of the Government Employees Pension Fund of South Africa, the country's largest pension fund with some 2 trillion rand in assets. Ms. Hacina is the Chief Sustainability Officer of the Societe Generale, France's 3rd largest bank with assets of over 1.5 trillion euros. Ernesto Ciorra is the Chief Innovability Officer of ENEL, the Italian multinational manufacturer and distributor of electricity and gas, operating in 30 countries and with assets of some 207 billion. And last but not least, Andreas Berger is the Chief Executive Officer of Swiss Re Corporate Solutions, the commercial insurance arm of the Swiss Re Insurance Group, the world's largest reinsurer, with assets of over 240 billion US dollars. Just a quick word before we start as to how we'll organize our discussion this afternoon. We'll first ask each of the panelists to give us a brief view in about 2 minutes of what the transition of the real economy means from their respective institutional perspectives. We then have a discussion about the structural changes needed to achieve the global sustainability goals, as well as a dedicated discussion on decarbonization. Just a few weeks before the next COP in Egypt, this might well yield some insights that could be of help in the intergovernmental negotiations, or at least we can hope so. Let's get started then with our opening question, directed first to Hacina of the Societe Generale. Hacina, you represent the commercial banking part of the finance sector. What, in your view, does the transformation of the real economy mean?
Hi, thank you, Elliott. It's a big question. I think that most of the time people think that we will go all of a sudden from brown to green. We'll have a switch from thermal cars to electrical cars, and the world will be more or less the same, but greener. But that's not the transformation we're foreseeing. It would be too easy. We all understand that with the given carbon budget, let's say, that we have altogether, we'll have to reduce significantly the carbon footprint, and that means a real rupture, not just a marginal change, but a rupture, including in the way that we consume, the way we live, the way we switch, for example, from ownership to usage. We switch as well in what is really the driver for our economies? Is it really the net result as it used to be, or are we going to take into consideration externalities, voices from our stakeholders to manage our license to operate for the future? So for me, it's a political matter. It's a social matter as well, because this transition will have to be fair, will have to be inclusive, otherwise it won't work. So we are at the same time, and the banks are behind that to finance, but we are at the same time envisaging a greener economy, but a much more sober one, with probably less ownership, much more usage, a real rethinking about what are we looking for and we are looking at as well. And I would say we are looking at impact. In mobility, for example, you don't really need to own this big fancy car and to show off with it. What you need is the impact, which is the mobility from A to Z. You see what I mean? So it's a fantastic subject. I think we could have a full panel on it. So I'll stop here. But globally, we are talking about a change of mindset. And I was very interested in the idea of not IPCC, which we all know now, but IPBC, and B stands for behavior, because this is all about the mindset and how altogether we're going to go there, accepting it and being fair for everyone.
Well, thank you very much. That's kicked us off to an excellent start. Let me turn now to Andreas. Same question to you, sir. From your view, from your institutional perspective, what does this real economy transition mean?
Yeah, first of all, thank you very much for having me here. I'm sitting here in a hotel room in Colorado Springs at a conference about insurance, and it's gathering insurance agents and brokers from the whole of the US and North America, actually. And it's quite topical. Everybody's talking about climate change here as we're facing the consequences of the Hurricane Ian. And why is that? Because the climate change poses a real long-term risk to the global economy. And as it stands today, the world is about to lose 10% of total economic value by the mid-century if the climate change is not going to be addressed, and if the 2050 net zero emissions targets are not really met. So, in particular with this natural catastrophe, the Swiss Re Institute, we have estimated that we had 175 billion of losses in 2020 alone. And most of the damages were caused by weather-related secondary perils, which is, for example, wildfires, as everybody could see on TV, the tornadoes, as we also could experience in very much everywhere in the world, and floods. And less of half of these losses, that's around 76 billion, were actually insured. So we're facing a huge protection gap here. Now, that's all not negative. There are also opportunities here to the finance sector. And I think here in this finance sector, the transition element is very important. The joint analysis of the International Energy Agency and the IMF, they were estimating that investments in clean energy transition will add an extra 0.4% to global GDP each year. Now, these are opportunities, and to grab these opportunities, we have confidently in the finance institutions and also the insurance sector. We have to transition in this space. We have to help companies to transition, because then they need basically the support of the financing institution and also the insurance sector. But in order to give this support, we really need to have a much better understanding, more granular understanding of the transition pathways of the relevant sectors. And there are many ways we can now help to transition. There are areas, for instance, where we can offer climate-related risk analytics models and also tools. As a matter of fact, we actually launched one platform the other day, last week, where we now help customers and corporates in general to see the impact of rising temperatures and sea levels on their physical assets, and they can project to the future, 15, 20, 25 years or so. Yeah. So, by the way, there are also challenges coming with it. And I think that's something we have to take very seriously. And one big topic is obviously greenwashing. So I think we as an industry have a responsibility. Don't oversell, be serious about it, and accompany the customers on that journey.
Thank you, Andreas. Let me turn now to Renosi from the perspective of an institutional investor, pension fund. How do you see this transformation?
Thank you very much, Elliott. The GEPF is an institutional investor, and it's also a long-term investor. So this obviously presents opportunities for the institution to influence what happens in the real economy. In the context of South Africa, we've got a couple of challenges. The first is that we've got high levels of poverty, inequality, and unemployment on the one hand. on the other hand, we have a significant dependence on coal. So for an institution such as the GPF, what is critical is to see how we can influence the way that companies behave through our investments in the real economy, in companies that are actually involved in the production of goods and services. And also to encourage innovation that contributes towards a low carbon trajectory. So encourage those companies that are engaged in those types of activities in order to ensure that we can achieve not just economic growth that is inclusive, but also that is less carbon that is less carbon intensive. So it's not just a question of what happens in the real economy from a growth point of view. It is also critical for us to take into account the socioeconomic context in which we are. Our members often ask us, what investments are you going to make in order to ensure that not only our living circumstances different now, but that in the future, they are also reflective of mitigating against climate change. What are you going to do about communities that are in coal mining areas that are being impacted negatively, whilst at the same time we're saying that we want to be less fossil fuel intensive? So the opportunity for the GPF as a long-term investor is really to take a critical look at those aspects, knowing that we're very influential in the financial markets, but also understanding that our long-term trajectory gives us the scope to really be of assistance to the country in mitigating climate change, but also in ensuring that the socioeconomic development components that are challenging us as a country are addressed.
Thank you very much, and I think that's an important point. You also mentioned something else that we'll be coming back to in a second part of our discussion, which is the question of how you could perhaps influence the ways that company behave. Let me turn now to Ernesto as the representative of the real economy, so to speak. How do you see it then? This transformation that you in the real economy have to make, and what are the challenges that you face in doing that? Over to you.
The transformation, the change always happened. The pace of this transformation in the last 100 years dramatically increased. And I think that we must look at the nature. Every 2 hours, we change the skin of our lips. Every 24 days, we change the whole skin. Every 15 years, we die, and we are born again, because we die and we kill the 99% of our body cells, even the bones. If we don't change, if we don't kill ourselves, we die. We permanently die. So how are companies already programmed for change, or they still want to defend the status quo, the current products, the current services, the current rules, the current markets, and what they have built up? This is the problem, because they try to defend themselves instead of programming themselves to change and to lead into the new. So what we have done is to build up the innovability function. It's a mix of innovation and sustainability, because we wanted to innovate to be sustainable, to survive. Innovation is the tool. We must change. Survival is the aim. Sustainability is the aim. But how can we survive? In harmony with the ecosystem, in harmony with communities, in harmony with the institutions, in harmony with the customers, in harmony with the shareholders, in harmony with the employees. If you don't act in harmony, unfortunately, you are poisoning yourself, as it happens with the human body. If you get any day a drug, if you get a lot of food, junk food, a lot of smoke, if you smoke too much, unfortunately, you are poisoning yourself. And companies can poison themselves if they don't work in harmony. I give you a concrete example. We had a permit to build up some hydroelectric plants in South America. They were hydroelectric. So if you look at the environmental side of the business, it was great. But we could implement them devastating sacred valleys for inhabitants, for local inhabitants, stealing their water, stealing the water that they used to drink and to let their animals drink. This was not sustainable on the social side. So we asked the governments to transform these permits that we have found when I joined ENEL and when our CEO joined ENEL from the past management. We have asked the government to transform those permits into new permits for new photovoltaic panels plants, allowing the local inhabitants to be the installers, the cleaners, the managers of these small plants, not touching, not devastating, not interfering with their relationship with the sacred rivers in the sacred valleys. And we have created thousands of working activities and opportunities for the local inhabitants. This is the way to work in harmony, thinking different. And another example is we have found.
Ernesto, if you could perhaps move on to the next section. I'm just
okay.
A little conscious of the time. Yeah? Thanks. Colleagues, you've all mentioned, each of you in different contexts, the issue of change, transformation. Andreas, you spoke about the understanding of transition pathways. Renosi, you spoke about the challenge of the longer term horizon and taking into account economic, but also social factors that have to be accounted for. That structural change to achieve these global goals of sustainability. Let me ask Hacina first. How can finance leaders ensure that their organizations can evolve quickly enough, because time is a consideration here, quickly enough to meet the requirements, the expectations about the transformation of the real economy, and taking into account the market dynamics at the same time? Over to you. Let's say about 3.5 minutes, if you please, and then we move on to the other.
Okay, yeah, I think it's a very important question because we have a hurry and it's not that easy to engage a deep transformation in all the organizations, of course. I would say that the first ingredient is adopting a long-term view in a world that is driven by short-term. We all have short-term KPIs. But the reality is, if you want to put people on the way to this transformation quickly, strangely enough, you need to tell them about the future. What does it mean that we all converge on carbon neutrality by 2050? What does it mean? Where should we be in 2030? What does it mean for now? And by doing that, you realize that it cannot be just a small incremental innovation, as we said before. It is a kind of rupture, and that requires a change in the organization. We don't have so much time here, but I was starting to read a book, The Good Ancestor. Maybe some of you have read. And it's about how organizations should think about the future generations. And some tribes would think about the 7th generation when they take one decision today. Shutting down this parenthesis, it's a fascinating subject. First, then the long-term stuff. Second, I would say, in our organization as a bank, we need to have everybody understand the subject is no more a sustainable finance specialist subject. It is everybody's business. And that means we need to first create awareness everywhere. We need to train people, but not just like 1 or 2 hours of training, a deep, well-organized training with several levels in the organization, asking at some point people, if they want to be managers of a level, that they have as well a certain expertise in CSR that will be in a system that is organized, like 1 level, 2nd level, 3rd level, making sure that you have specific targeted populations that are going to be your champions, that are trained really strongly, like managers, your ambassadors, like some juniors, some talents. So trying to be smart, you see, trying to be smart, so that you can really embark everybody quickly. And not only about conventional trainings, but like learning expeditions to some circular economy plans. You have podcasts, you have such a lot of workshops, that you can do. Awareness training, but also individual objectives for managers and therefore people, but also incentives that allow people to boost business in the right direction. and then monitoring tools to monitor when you drive the budget of a bank or of an activity. How much scarce resource do you give? It has to be as well taken into account that it is going to be for the green business or for the sustainable business or not. So we are entering into a holistic view where CSR is no more a specialist stuff. It's everywhere. It's embedded. We call it by design.
Okay, thank you. That is comprehensive, but it's also quite clear that it's an institutional and a holistic view that we need. I'm going to turn now to Renosi and to Andreas and ask about collaboration. What kinds of collaboration do you see as helpful or necessary in accelerating change within your institutions, within the economy as a whole? Let's start with you, Renosi. What types of collaborations would you need?
Well, I think one of the features of where we are now is that different institutions and regions are at different points of the journey when it comes to seeking to meet the requirements of a low carbon trajectory. So collaborations that are inclusive, that bring together people within the same, same field of interest, but who are at different points of that journey, I think is critical, so that research and knowledge can be shared, and the people that are lagging don't have to reinvent the wheel. I think secondly, we also see that regions are at different points, and in some cases, there's a lot of contestation. So global organizations, in my view, that are inclusive are important in bringing together all those different voices and in fashioning a way to do things together, taking into account that there is a need for speed, but we are all at different levels. Think an institution such as the PRI, which has nearly 5,000 members, all of them at different points. It includes investors and asset owners, which is another, I think, important aspect. Who are the different people? What institutions are at different points of the value chain? They face different risks and different imperatives, but we're all trying to move in the same direction. How are we going to do that in a manner that is not disruptive and that optimizes the various resources and knowledge that that we have? So I think an institution such as the PRI, which provides platforms for this kind of collaboration and which takes a big tent approach, is one aspect of collaboration that I think is important. Is really learning from those that are ahead and creating a momentum that is catalyzed by the fact that you are of like-mindedness, but you bring different things to the party.
Thank you. Thank you very much. Andreas, let me ask you the same question. What sorts of collaboration would you consider to be helpful in accelerating the transition in the real economy, but also in finance itself?
Yeah, maybe let me talk about two areas. One is public-private partnership frameworks, and the second one is sustainability standards. So it's clear that we all have a collective responsibility to work together and to take action. We need stronger frameworks and also more agile processes. And that I think is something that everybody can observe. We need faster and more creative approaches to defining such frameworks. Traditional, lengthy consultations and political deliberations, top-down processes are ill-suited for this urgent task at hand, as my colleagues here said on the screen here. The European Investment Bank's funding of climate action and environmental sustainability over the next decade gives Europe's public and private sector the opportunity also to take substantial progress towards a carbon neutral future. And I think that's an opportunity that one has to seize. We at Swiss Re, we very much believe in the power of evidence-based arguments. And we've worked with many governments already until today around the world on innovation and innovative nature-based solutions. And also, let me give you one example where the UN is actually also involved. There's this Insurance Development Forum, IDF we call it. It's a great example where the industry gathers also under the support of the UN in order to be very complete in closing the protection gap particularly climate exposed countries are very much the target here, and those are names like the household names, even the peers that we have: Munich Re, Aon, Allianz, AXA, Renaissance Re, Score, Willis Towers Watson, etc. So that's one aspect. The second one is, what gets measured gets done, and I think sustainability standards, that's a big topic. There are many ratings out there, and I'm very happy that now several that the ISSB, the International Sustainability Standards Board, was created, and I think there's a lot of work that has to go into it. But I think this is very important to track also ESG and to allow better comparability amongst corporates. So this multi-stakeholder effort is absolutely critical, and I think we got to speed up, and that's why I mentioned, we have to work on the frameworks and also on more agile processes.
Thank you both. Now, before I go on to the next question, I do have to come back to something. There was a little tantalizing hint about that, but neither of the two of you mentioned the regulators, the ones who can sort of set the parameters for action in the financial industries. Do you see a role there for specific collaboration between the financial sector actors and their regulators in trying to accelerate the change towards greater sustainability in the financial practices? Either of you, just briefly, your views on that.
I think certainly there is a need for that, because the regulator kind of sets the framework and the pace. So if the regulator is not stepping ahead in giving guidance as to where we all should be going, obviously then it creates a situation where some people, you'll have variability if it's all left to each and every one of us to decide what to do. Central banks are also important because they are concerned with financial stability. Are the current frameworks enough? Do they provide sufficient flexibility? What is it that they can do to also nudge everybody along the right path? So I think there's scope for a lot more conversation of that type, particularly at country level, at least in my context. I think that the scope to do that, I know that at the global level there are all these conversations, but we also need to look at different countries' level of maturity of their regulatory frameworks and how that can also, that collaboration can be encouraged.
Yeah,
okay.
Very briefly, regulators, in particular also on the insurance sector, they look at the solidity of reinsurance and insurance companies. And as you see, all these natural catastrophes, they are impacting balance sheets. And that's why this is a topic that is becoming more and more important in our conversations. And so there's a little addition on the insurance sector as well.
Great. Thank you very much. Let's move then into the next one. And then, so you have the last word in this particular bit of structural change. How do leaders in the various sectors of the real economy, how do you lead this transformation in your respective sectors? Over to you.
For me?
Yes, please.
Okay.
How would a leader in the real
economy? We are leading, and we have become the largest producer of renewables in the world, changing every day everything. The process needs to be changed. The technologies need to be changed. Everything should be changed. And if we don't do, we can't lead. And even the regulators can be the light side of the force, the Jedis or the Siths, if they are open to change the rules in favor of the society's needs. If they want to defend the status quo and the current rules just per se, they are Siths. They are part of the dark side of the force. And what we have done concretely is to open up our challenges, technological and social challenges, thanks to a crowdsourcing platform, openinnovability.com. Every department, every business line, every function, even the finance department, has shared the concerns, the challenges, and we have raised more than 20,000 ideas. We have implemented more than 650 projects. We have scaled up more than 250. We have created an incremental value that we have measured action per action of more than 2 billion in 5 years. And in terms of market cap, it means more or less 10 billion of incremental market cap that we have created thanks to this approach. And giving another figure, we have lowered the cost of renewables by 65% in 7 years. So we switched. What was sustainable on the environmental side, but was not sustainable on the business side, has become sustainable on the business side. And what I think that the rules and the ecosystems must be always open for change. And what we have done is to establish an open ecosystem with independent innovators, startups, research centers, the academia, also the regulators, involving them in what we do, opening up our hearts, our brain, being humble and understanding that the best people don't work for our company. The best people are always outside, and we must involve them, leverage their passion, their willingness, their commitment to create a better and more sustainable world. This is exactly what we are doing. And the best talents, they don't work for money. The best talents work to make something of themselves concretely useful for the humanity. So we have involved more than 500,000 people in our innovability activities. We have 60,000 people at ENEL, 500,000 involved. Our providers, the startups, and the ecosystems where we are active with the hubs in San Francisco, in Boston, in Tel Aviv, in Madrid, and in many other countries and cities, they provide us with the natural source of to kill ourselves every day and to be born again every day.
Thank you, Ernesto. Now, I'm going to move on to the last segment of our discussion. It's about decarbonization. And I'm going to start again with you and with Hacina as two sides of the same coin, if you will. You in the real sector trying to get the energy sector to decarbonize, and Hacina in the commercial banking sector working hand in hand with different sectors in the real economy in the same effort to achieve decarbonization. Hacina, let me start with you. How do you see banks, in particular banks, working closely with the various sectors of the economy to achieve this decarbonization that we all need?
So I think we're clearly here with SDG 17, Alliance for the Goals. We need to work together in alliances with industrials and with our peers as well to invent together the new standards so that, we don't go each way and then we lose everybody. Because we have so much to finance in such a short period of time. We're talking about trillions. I think it never happened in my whole career that we had so much to do in such a short period of time. But even though we know more or less where we want to land in a low carbon economy, we don't always have the GPS depending on the sectors. So we need to work together. So what we are doing on our side is reinventing as to the mandates of our teams. Because what people do, usually they are very efficient, they have a product and they know how to push their own product. But today we have to reckon that our clients, the industrials, they need us to take all our good ideas and expertise around them and come up with a solution. For example, in an industry like, if I take the car industries, the car maker of the past has nothing to do with the car maker of an electrical car. His problem now is more the battery. He's not going to have the billions to invest in the battery factories, for example, and then nobody will buy the cars if you don't have all the infrastructure to plug in. Well, just by this sentence, I have the car and the steel industry. I have all the recycling and the circular economy. I have all the metals and mining industry, and I have all the infrastructure and the infrastructure funds behind on the chain. This is a new cross-sectorial value chains. So our first push is to understand the new issues, the new challenges of a given client in a given sector, to derive what it means around the chain, and then to put all our strengths in favor of the solution, because the good thing is we are very active everywhere in these chains, but normally with people that do not talk together. The guy in charge of the energy, the guy in charge of infrastructure, the other one in metals and mining, the other one in, you see what I mean? So that's for me, that's the big thing internally. And then alliances with clients on very different stuff to make sure that we are not, we work together and we put all our strengths in alliances with industrials to help design the bankable solutions day one. Not like in the past where you had R&D and then you had some prototypes and then somebody would ask you, can you finance me? No, if we want to be efficient, we do it together, and we try, and and we structure it, and we set standards that hopefully will work.
Okay, thank you. Ernesto, you're on the receiving end of all of that. Is that how it comes across to you? How do you see the financial sector working together with you to promote the decarbonization, the transformation of the energy sector?
Some years ago, our people work in Innovability in the finance department, because in every department, in every business line, we have people working on the change of this area. They invented a new bond. It's called SDG linked bond. And when I shared the idea in a panel at Davos with Mr. Gore, the former vice president of the United States, he was in front of me, and he was definitely skeptic, because he said that there is not any tool that provide companies with a discount on the interest rate that they pay, thanks to the fact that they are sustainable. I say that everybody is skeptic before innovation, and after people are enthusiastic if this innovation would be successful. And we did. In September 2019, we literally invented this bond that has been called by Forbes the disruption in the sustainable finance and in impact investing at global level. We have raised up till today 26 billion of US dollar today, and the value of this market is more or less 200 billion. Many companies copied us and they are very famous, like Tesco, like Novartis, like H&M, like Chanel. They've copied us, and we are very happy for this innovation, because it's an innovation, and it came from an Italian company and an energy company, and people in US couldn't understand how could it happen that an energy company from Italy has created a revolution in the sector, but it's full of Italians that created a revolution in the history. But okay, it's just a joke. This is the funny part of the funny comment from Forbes. But what I want to share with you, that this is just the start, because the finance department can finance what is sustainable. We were looking just at our trajectory, our decarbonization trajectory that has been certified by SBTi, Science Based Target Initiative, and thanks to this certification, we issued those bonds, and we saved 25 base points. What Al Gore called impossible, we made it possible, thanks to the fact that companies from the finance sector have understood that if you are more sustainable, you are less risky. So the interest rate that you are going to pay should be lower than the interest rate of a not sustainable company. But this is just the starting point, because I think that decarbonization is even less important than being socially sustainable. If I can demonstrate that I can recycle what I use, I could issue a circular bond. Moreover, if I can demonstrate that I can create a positive impact with the communities where I work, where I'm active, if I bring electricity to many areas in South America, as we are doing, or in Africa, as we are doing, bringing electricity create a lot of opportunities, so you reduce your risk of making business in that area. So you need to have a better and easier access to the capitals. This is just the starting point of a revolution in sustainable finance that any company can have, adopting an SDG. Adopt an SDG, and let's finance this adopted SDG.
Well, thank you for that. Now, again, I'm going to go out on a limb and suppose that you are one of the leaders, the innovators in the energy sector, in private business as a whole. I'm sure that there are also others that are not quite as convinced, not quite as enthusiastic about this. And so, Renosi, I turned to you and I said, now, you mentioned this earlier, and I've noted it down. I haven't forgotten it. You said that GPF has the market power, the influence, to be able to influence how companies behave through their investments. Is it then easier to divest than to change the real economy from within, given that not everybody is going to be quite as innovative and as open to change as Ernesto? Over to you, Renosi.
Yeah, no, certainly for us as the GPF, because that, being a significant player is a double-edged sword. in the sense that on the one hand, you have the influence, and if you actually disengage from the market, it could have significant consequences. So what we have chosen to do is really to exercise the influence by ensuring that our own policies require that ESG and responsible investment are, integrated into the decision making when capital is allocated, and that we monitor what it is that the companies do. And when they fall short of what our objectives are, to engage with them. Now, it's been a very interesting process because initially it looks like nobody's paying attention to what you're saying, but very soon you begin to see a change in behavior. That if you've got a significant investment from the PIC or our asset manager through asset manager, and they are signaling to you that you are not actually performing as you should on your ESG parameters, that sends a signal to other investors who initially may not be bothered with what you're trying to do, but over time we've seen it actually change people's behavior. The other aspect of what we do is we've invested a lot in renewable energy in order again to put our weight behind those sectors that are contributing towards a low carbon trajectory. And I'm very pleased to hear what Ernesto is saying, because I think another potential area is that we have many people still without access to energy in South Africa, and it would be the wrong thing to ratchet up provision through fossil fuels. So that innovation is something that we look for and look to ensure that we can provide energy to the underserved and unserved in a manner that's that's consistent with limiting the impact on climate. And all of those things, in my view, happen most effectively through engagement and through partnering. So at some point we might see ourselves going the divestiture route, but at the moment, given our challenges and where we are, we feel our best influence is actually through engagement, but to do it intentionally and diligently.
Thank you. Andreas, we have just about 2 minutes left. From your view as an insurer, looking both on the investment side and on the underwriting side of your activities, how do you see then this economic transformation in the real sector? Do you see a way for you to use the tools of your industry to accelerate this transformation?
Well, now you're posing me a real challenge in 2 minutes.
A minute and a half,
let me give it a try. So, as a headline, we could say the train has left the station quite some time ago. We as insurance companies can advance sustainability through our underwriting decisions and our investment choices, and also by engaging with our clients on environmental or ESG issues. And I think this engagement and this dialogue is very, very important. We really look for partners who also commit to the net zero targets 2050. We have very clear goals as Swiss Re. It's very public. We have various initiatives on both sides of the balance sheet. So if you take, for instance, the investment side, the asset side of the balance sheet, sustainability has been the core of Swiss Re's business on that side of the balance sheet for over 40 years. In 2017, we were one of the first insurance and reinsurance companies with integrated ESG benchmarks, in all our investment portfolio. And we have 3 pillars we look for, and I don't want to go into the details, but it's about enhancement, inclusion, and exclusion. Now you might want to say, what does the exclusion mean? Exclusion is based on our group-wide ESG risk framework, and we really look at investment targets exactly from that aspect. We also actively engaging with companies in our listed equity portfolio with the carbon intensity, and we look at really measures, where they reducing it in aligning with the 1.5 degree pathway that was committed in Paris. On the liability side, though, in the underwriting side, the core business of an insurance company or a reinsurance company, there's a lot happening too. In 2019, we made a public commitment to reach net zero emissions by 2050 across all our business. And this was done by signing the UN Global Compact Business Ambition of 1.5 degrees. We have in 2021, by the way, also co-founded the UN convened Net Zero Insurance Alliance, where other insurance companies come together and work on the same objective. You have seen publicly that we have introduced and implemented a thermal coal policy, and another also aspect of oil and gas policy was also introduced now as an update. And all of this, will obviously lead to our targets. Thermal coal, just a quick one. I think this is very important because
Andreas, I'm afraid we're running out of time. We can't get into too much detail of the actual stuff, but I do take your point that you have ways in which you can engage through your daily business on both the insurance and the underwriting and the investment side to sort of drive the sustainability agenda. I'm afraid we are going to have to wind down now. We have run out of time, and that sort of lets me off the hook of trying to summarize what was really a quite wide-ranging discussion. I do take the point, though, and I hope that this is you'd all be in agreement with this, that there are lots of things that each of you in your respective areas can do and are doing to advance the sustainability agenda and provide the finance that's needed to transform the real economy and to use that finance, as Ernesto says, in innovative ways to accelerate the transformation that has to happen. I do think at the same time, however, that we do need to consider that question of collaboration and partnerships that we've discussed a little bit in the course of the day, that these are ways in which we can, from the financial side, understand what the transition pathways are, what the needs and requirements for support and help might be, and at the same time, gearing up the financial sector workers themselves, those who are making the decisions and actually supporting the clientele to understand sustainability in a very fundamental way, so that the products, the services, the support that the financial sector provides are fit for purpose and help those innovators like Ernesto and his colleagues who are looking for new ways of doing their business and promoting the change without which we will, in his eloquent words, we will all die, and to manage to do that as quickly as possible. So with those closing remarks, I'd like to thank all of our four panelists for a really excellent discussion and encourage all of you in the audience to stay tuned. There is much more to come in this year's Global Roundtable. Thank you very much.
Thank you.
Thank you.
Thank you.
Bye-bye.
Bye-bye.
Ciao.